Hello dear traders, today is the 22nd of January. I'm Anna Kasatkina here with the latest financial news release. On Thursday, financial markets observed oil drifting away from its 12-year low seen earlier this week. Crude prices climbed unexpectedly after ECB President Mario Draghi hinted at further monetary stimulus in March. Another factor that contributed to a sharp rise in black gold was freezing weather conditions and severe snowstorms along the US East Coast and in some European regions. However, meteorologists say that the current cold snap that has fueled demand for energy products won't last long. Most investors rushed to cash in short positions and buy at lower prices, thus pushing oil prices higher. Brent crude advanced $1.44, reaching $30.72 per barrel. At the same time, US West Texas Intermediate came in at $30.82, adding $1.19. Today, oil prices are extending gains. Analysts predict that the North Sea crude benchmark is set to break above $33 per barrel. Still, the whole situation appears somewhat paradoxical. There are no fundamental reasons for price growth as of now, with crude supply still exceeding demand in the global commodity market. Yesterday, traders were closely watching the official U.S. crude stockpiles report. The latest data provided by the U.S. Energy Information Administration showed a gain of about 4 million barrels in the past week. According to the EIA figures, crude stocks in the United States printed a build of 3.98 million barrels in the week that ended on January 15. The data exceeded expectations for a modest rise of 2.8 million barrels. As for refined product inventories, gasoline reserves increased by 4.56 million barrels, while distillate fuel supplies posted a slight drop of 1.02 million barrels. Despite the larger-than-expected pickup in U.S. oil stockpiles, crude prices rebounded and edged higher, staging a surprise for market participants. However, the rally is said to be short-lived. Future price movements will depend on Iranian exports and the pace at which the country will return to the market after the lifting of economic sanctions. The prospect of Iran flooding the market with more oil puts heavy pressure on crude prices. At present, $24 per barrel is the most likely short-term target for Brent. This was Daily Financial News on Insta TV. Thank you and goodbye.